Antonio, stay with us. The Nigerian government officially gazetted two major fiscal reforms: the deduction of tax at source, Withholding Regulations 2024, and the Value Added Tax Modification Order 2024. These reforms introduce significant changes to tax landscape, aiming to provide relief to businesses and support clean energy adoption. The withholding tax regulations grant tax rate reductions and exemptions to businesses, especially SMEs with an annual turnover below 25 million naira, with implementation beginning in January 2025. Now, talking about the VAT Modification Order 2024, it formalizes the suspension of VAT on diesel and extends VAT exemptions to critical areas such as compressed natural gas, electric vehicles, biogas, and biofuel equipment, emphasizing the country's shift toward clean energy for cooking and transportation. Kenneth Erukeme, partner, PwC Nigeria, joins me for this. Thank you for joining us today.
Thank you for inviting me. Happy to be here.
Absolutely. Now, the Presidential Committee on Fiscal Policy and Tax Reforms, they presented some of these recommendations to us earlier in May to stakeholders and media. I mean, it's so good to see that some of these recommendations have been gazetted. What do you make of the process so far? You know, they had timelines. There was the 3 months, there was the 6 months. How has it been so far for you?
Yes, so I'm an outsider, obviously.
Of course.
For me, I expected that things would pan out exactly the way I've seen them. Government is not the most straightforward and efficient in terms of ability to implement things very quickly. So when initially the Presidential Committee on Fiscal Reforms and Tax Policy commenced, the expectation was that it would last for about a year. In the Nigerian context, that's almost impossible, right? Because you would have to engage several stakeholders and carry different people along. And one of the things that will give you an insight into the process is these withholding tax regulations, for example, had been released in July, right? There was a version that was out in June, July, and people were wondering whether to implement or not to implement because it was not gazetted. And we've waited since June, July, up till now to finally see one published. So I would say the performance overall of the committee has been good, because within those restrictions and the bureaucracy of government, they've been able to, deliver some positive outcomes. Some of them we've been seeing, through executive orders, and now these two, gazetted orders in quick succession: the VAT exemption or modification order and the withholding tax order. So I would say overall very good, but the big one we're waiting for is the economic stabilization bill, the final implementation, because in there are several things that the committee, the big ticket items that the committee has been working on, that implementation would crystallize. Of course, the one around tax identification and the harmonization of that.
Harmonization, very important, actually.
Harmonization, very important, especially in the context of the different tax authorities and agencies, federal, states, and local government. And for businesses, dealing with several of them becomes a bit complicated. So if harmonization is one of the things the business community has been calling for. And then you would also see a reform of the various tax legislation: VAT, withholding tax, companies income tax, even the Petroleum Industry Act, or petroleum profits tax, capital gains tax. So what I understand is that there would be a total transformation and overhaul of the various tax legislation.
Absolutely. That's in the hope that, all the necessary conversations go on, and that we have the necessary, legislation also in a very quick time, actually. I mean, in good time, actually. Now, let's talk about the VAT Modification Order 2024. Talk to us about, the offerings and expected impact, on the everyday Nigerian.
So when I look at the bill, even though it wasn't exactly stated there, well, the order, not the bill, even though it's not exactly stated there, I see some very important strategies. I think 3 of them. The first one is the recognition of the government of the challenges in terms of energy prices for Nigerians today. So this is everything in the downstream petroleum space, whether it be, diesel, petrol, and even electricity, trying to deal with that and ensuring that, at least from the fiscal side, the government is granting some reliefs. So recognizing the challenges for Nigerians and also responding to that. I think the other thing, principle, which I also uncovered there, is that Nigeria recognized, gas as a very important transition, element in achieving our net zero targets. So, you can't just switch off from crude or hydrocarbons and transit immediately to renewables. So, and as you can imagine, Nigeria is largely a significant gas reserve nation. So the ability to unlock that will be important. And so the VAT modification order sort of tries to incentivize that value chain, the gas value chain, by incentivizing the importation of equipment related to LPG, compressed natural
ATK,
gas,
all of them actually.
the buses and all that, and then also recognizing the fact that we also need to achieve our net zero targets. Nigeria passed the Climate Change Act a while back, and one of the important targets is that by 2060 would achieve net zero targets.
Okay, well, that is important. I mean, one of the things I did was also to measure the response of Nigerians on social media. And I saw a lot of them asking questions about what about food, what about agriculture, what about health, and all of those. Are those captured here? Because there have been a lot of pronouncements so far. So sometimes, trying to put everything together can be a lot of work. So talking about food, whether it's agriculture or health, where do all of this stand in this particular document?
You wouldn't see it in the document because, and I think some work still needs to be done, but currently, most of the services in the health and medical space is already exempt from VAT. So you go see a doctor or you're purchasing medical equipment, all of that is VAT exempt already. And there was an additional executive order in June where the president announced that there'll be no import duties and VAT on medical and pharmaceutical equipment as well as inputs. So that is already operational, right? Same for food, right? Basic food items are exempt. But the big challenge from a Nigerian perspective is not the exemption. For those items, we expect them to be zero rated. So the difference is that for exempted items, their costs will still have VAT. But for zero rated items, their costs will also not have VAT. So every input in the value chain would be recoverable because it's zero rated to the customer. And that's what businesses are expecting in that space. So if you're exempting, you're only reducing the VAT on the last mile. You have to remove the VAT across the value chain, and exemption doesn't do that. My expectation is that when the overhaul of the VAT Act happens, that those very critical elements like health, education, food, they would be zero rated, and that would ensure that the pricing structure across comes to the final consumer. So for me, I think that that's key. Of course, there's also an expectation, like you would know, because in the past this conversation had popped up, whether the VAT rate was going to be increased.
Of course. I mean, I even heard him talk about it this morning on the station on Jasiri. So he was also answering that particular big question. So how about the fact that, for things you've called non-essential and luxury, we're going to have additional 2.5%. Has that started? When is that starting? Is it part of this particular modification order that we've already seen?
This VAT modification order doesn't touch on that. So it will be the outcome of the economic stabilization bill.
So there's
as well
a lot
as
of
the
things to
VAT
keep track
exemption.
of.
There's a lot. There's a lot. As you can imagine, to reform the fiscal space in this country, you can't do it overnight. So it will take a lot of effort. But I think what Nigeria needs, intends to do is to harmonize with the rest of the ECOWAS region, because we are committed to that. And that would, mean that we have to increase our VAT rate. However, the difference between Nigeria and the other countries in West Africa is that the ability to claim input VAT is very limited in Nigeria. So if government is going to increase the rate of VAT on non-essentials, my expectation is that they should expand the base on which businesses can claim relief for the VAT they incur on their expenses. When that happens, I think businesses may not be too worried. I think the other element that the common man would obviously raise an eyebrow to is, the categorization of things called non-essentials.
Exactly.
So if you put them in one bucket, what about luxury items? Why would the common man be paying exactly the same VAT rate for things relating to, even though they've removed it on transport, but clothes and things like that, but a yacht and a private jet is paying the same VAT rate? A sound principle of fiscal policy would expect that government puts a bit more pressure on those luxury items in order to fund infrastructure for the poor and the vulnerable. So for me, I think that would be one thing I would like to see. I'm not so sure it's been sufficiently covered, but I haven't seen the VAT bill yet. It will be interesting to see whether that's in there.
Okay, I think I forwarded something to you earlier, but that's by the way. Now, are there, maybe some criteria or some things to consider before qualifying for certain things?
At the moment, not well. Let me say, first of all, the law is clear. The law doesn't place a demand, but practical implementation, there might be practical requirements placed on people to claim some of these exemptions or benefits, especially when you're importing. So if you're importing, some of these items, as you can imagine at the port, the Nigerian customs will want to be able to distinguish whether those items are used for the purpose which the exemption was granted or not. So there is a process called the import duty exemption, where they grant a certificate through the Ministry of Finance, where they look at the items that you're importing and check it against the exemption list. So even though the law doesn't place that requirement, you would see that the order also anticipates that the FRS and the Nigerian Customs would come up with regulations and guidelines for how this will be implemented, because you don't want to be giving the incentive to the wrong people. So I think the first thing to do to qualify is to be playing in that space, but there would also be some practical, requirements from the Federal Inland Revenue Service and the Nigerian Customs Service.
All right, let's come to the withholding tax now. I mean, while it's a bit technical, one of the aim of this particular one is also to, simplify the process and make it less ambiguous and all of that. Do you think that has been achieved looking at the document we have now?
As a tax practitioner, I'm a tax specialist, so I've been doing this for 20 years plus. It simplifies it for me, right? But you must appreciate that, this is my life, right? There are some businesses that cannot afford consultants. For them, I'm not so sure whether we have reached the level of simplicity that's required. But, I must applaud the committee because they have dealt with some really thorny issues in relation to withholding tax. One of them, is in relation to traders and manufacturers, where they supply their goods in the ordinary course of business. So the previous regulation said that, sales in the ordinary course of business was exempted. But the tax authorities, because there was no definition of what constitutes a sale in the ordinary course of business, the tax authorities used to put pressure on businesses and say, you must deduct withholding tax anyway. Otherwise, you go to court. For small, medium enterprises, they're not inclined to go to court or be involved in such disputes. So they pay. They're bullied into paying, essentially. So the committee has dealt with that issue and said, if you are a manufacturer, your product will be 0%, will be exempted from withholding tax. But if you're a trader, so you're not the one manufacturing, you're buying to sell, then the withholding tax will be 2%. And I think that that's important. So withholding tax really is not a tax on its own. It's an early payment of income tax. So you cannot be applying high rates of withholding tax to low margin businesses. So this is why for passive income, the rates are high, 10%. For services that are active, it comes down. And then if you then go down to traders, it further goes down to 2%. And then if you're manufacturing and selling, it goes to 0. And I think for me that's important because manufacturers today are under serious pressure in terms of economic headwinds. They're dealing with FX. They're also dealing with inflation.
Energy.
And how much of the inflation or the cost do you pass to the customers? Customers do not even have the appetite or the earning capacity to pay for those items. So their volumes are going down, like you said, energy, and so on and so forth. So a lot of them are posting losses. So if you're now taking withholding tax on their supplies, then they are paying taxes that are not due. And I think the other thing this withholding tax regulation seeks to deal with is the issue of refund. You know, because it's not a final payment of tax. They're supposed to take the credit notes and then recover it against their final income tax when they're paying. But if you have no tax to pay because your margins are low or eroded, it then becomes very difficult to go to the tax authority and say, oh, please grant me a refund, because previously there was no budget for it or limited budget for it, and everybody was asking from the same budget, and the process was a bit opaque. Now, what the committee has tried to do with this withholding tax order is to ensure that the refund process becomes simplified, and that would provide a lot of solace to manufacturers and other players alike.
Well, there is a concern that some persons have raised with this, especially when you talk about the 25 million naira threshold. They are saying that the average, sale price has gone up as a result of inflation. And they are saying that this 25 million naira you're talking about, pre-BAT, I mean, could be 50 million naira at this point in time. What's your take on that, saying that the 25 million naira threshold actually isn't enough?
You're correct. And what we don't do very often enough is reviewing thresholds. So that threshold of 25 million was introduced by the Finance Act 2020, right? Since 2020, in 2020, what was the exchange rate? It was probably 300 or 400 or something like that. What was the price of bread at that time? Bread was probably 200 naira. Today, if you want to buy bread, the big loaf, it's about almost 2,000 naira.
Almost,
isn't it?
yes.
Yeah. So it therefore means that threshold is not fit for purpose today. But the government does not do the review of the thresholds often enough. So as you can imagine, for many small businesses, 25 million naira is not a good threshold. And I have visibility of, and you probably do, and that's why you raised the issue of businesses. They've had to increase their prices, and they cross that 25 million very easily. But they're still very small businesses, cottage industries, salons, shops, and so doing 25 million, 30 million, and so on. Now, if they have to be deducting withholding tax and pursuing all of this, it doesn't help them. So
what's the ideal amount for you?
I think we have to work out, I haven't done the calculation, we have to work out what the inflation has been since that time and come up with a new number. I think it will, be a minimum of double.
A minimum of double, that's
yeah.
fine. So just before we go, what do you make of this? Initially, a lot of companies were preparing for July 1, 2024 implementation, and then now we're hearing it's January 1st, 2025, and commencement is September 30th. Now, these are 3 dates. How will all of this work?
Like I tell people, I think there were a lot of opinions flying when the signed version came out, but wasn't gazetted. I think I was
in less than 30 seconds.
Oh, okay, sorry. So I was very careful not to implement that for my clients. Why? Because the substantive act actually says the minister there must be a writing to the taxpayers, or the order must be gazetted, right? Now that it's been gazetted and says implementation 1st of July 2025, I think that's what
2024. Then January 2025, that's the one that's in the
Sorry,
document.
apologies. 1st January 2025 is the implementation date. That's what we should hold on to. The other one that says the tax authorities will come up with guidelines and go to the minister, we don't have any insight into that. And I don't know or see the various tax authorities writing to have an inconsistent date, because it will be very difficult to track. You then have taxpayers that are effective 1st of July, some that are later on, and then some. It would be so messy. And I don't think a case-by-case strategy by taxpayers would work, because each time they go to the tax authorities, the actual tax
They
authorities
then state that they used the other one. Okay.
So it's going to be too confusing. So for me, taxpayers just hold on to 1st January 2025 and implement.
All right. Thank you so much, Kenneth Irukeme, partner PwC Nigeria, for your time on the show today.
Thank you, Perpetua, for inviting me.
All right.